99% of investors make one mistake costing $300,000 over 30 years. Here's the math and how to avoid it. The mistake? Buying individual stocks instead of index funds. Seems harmless, feels exciting, costs a fortune. Psychology: stocks feel like investing. Index funds feel boring. Brain wants Tesla that could 10x, ignores 50 stocks that went nowhere or crashed. This destroys wealth. Data 2000 to 2023. S&P 500 returned 9.8% annually. Average investor returned 3.7%. That's 6.1% underperformance. Watch what it compounds to. Index investor, $1,000 monthly, 30 years, 9.8% returns. Ending, $1,896,000. Stock picker, $1,000 monthly, 30 years, 3.7% from wrong picks, panic selling, poor timing. Ending, $587,000. Same contributions, same time, different strategy. Difference, $1,309,000 lost. Worse, stock picker researched 5 hours weekly, 30 years, 7,800 hours. At $50 per hour, $390,000 lost time. Total cost, $1.3 million lost returns plus $390,000 lost time equals $1.69 million for excitement. Industry secret: 90% of pros can't beat index over 10 years. Finance degrees, Bloomberg terminals, research teams, connections, can't beat it. You definitely can't. Why feels right but isn't? Brain remembers wins, forgets losses. Bought Amazon, made 3x, forget 10 stocks that tanked. Selective memory. Data says otherwise. Dunning-Kruger in investing. Beginners think genius after lucky pick. Intermediate realize hard, become humble. Advanced accept can't predict, buy index. Most stuck beginner, losing money, thinking winning. Why index wins? S&P 500 self-cleaning. Underperformers removed, replaced by winners. Always holding best 500. Stock picking holds losers forever, usually don't recover. Real example, GE stock 2000 at 60. Today, $75. 25% gain, 24 years, 1% annually. Inflation adjusted, lost money. S&P 500 became 7x, lost 86% potential wealth. 3 justifications wrong. 1. Investing in companies I believe. Belief doesn't equal returns. Index gets everything, market decides. 2. Index risky, all egg stock market. Individual riskier, one company bankrupts. 500 can't all bankrupt. Diversification reduces risk. 3. Buy winners like Apple, Microsoft. Past doesn't predict future. 2000 top 5, GE, Cisco, Intel, Exxon, Walmart. Only 2 still top 10. Can't predict next 20 years. Only valid reason buy stocks, 10,000 plus hours experience, finance education, doing for entertainment with small portion, not core strategy. 0.1% of people. Everyone else index. Strategy that works, 70 to 90% total stock market index or S&P 500. 10 to 30% bond index for stability. Rebalance yearly. Boring. Effective. Proven. Best part, requires 0 time. 30 minutes yearly rebalance. Those 7,800 hours wasted, earn money, build business, enjoy life. Index quietly outperforms. Retirement, $360 monthly. Index at 9.8%, $855,000. Stock picker, 3.7%, $264,000. Index retires 3 times more, less work. Action, hold stocks, calculate actual returns, all positions. Compare S&P 500, same period. Honest, underperformed, sell, buy index, never look back. Don't have stocks thinking about? Don't. Open Vanguard, Fidelity, Schwab. Buy total market or S&P 500. Automatic monthly. Ignore noise. $300,000 mistake avoidable. Most make anyway because boring doesn't feel like investing. Feeling like investing costs a fortune. Being successful is boring. Subscribe for evidence-based investing every Tuesday and Friday.